We'll do the next comprehensive question. Now we have completed almost all types of questions. In the next question, that is illustration 22, just turn your page and see. They have asked you to do realization, partner's capital, partner's current account and bank account. Current account normally you will not get in the question, but you need to learn that also. In one chapter admission, I think we have done this type of question, but here it is different. Different means I will show how to do the current account. So partner's current account also we have to do in this question, that's only change. So we will start with realization. Close all assets and all liabilities. So here we have assets like debtors 50, stock 60. From this asset side, what all items we have to exclude? Bank you have to exclude, then machinery, building and all you can take. C is current account, that you can't take in realization. Rest all assets you can. Then furniture 25. Then patents 35. Machinery 1 lakh. Building 3 lakh 20. Yes. Then from liability side you can close only external liabilities, and which is the external liability you have there, only creditors you can take. Current account and all you can't transfer to realization. So only creditors we have as external liability. Creditors figure is 70,000. So that is over. Read the adjustments. Realization expenses to be borne by A. You remember that section realization expenses we discussed. This transaction is from that section. So realization expenses to be borne by A, for which he is to get a credit of 10,000, means we are giving him a remuneration of rupees 10,000. And what's the journal entry? When the remuneration is payable to a partner, it is realization account debtor to that partner is A's capital account. So you post it, realization debtor to A's capital account. The remuneration is 10,000. Then again with the same transaction, actual realization expenses paid out of firm's bank account, it is 12,000. Actually, who is supposed to bear it? The partner is supposed to bear, but finally firm paid. What did I tell you? When it is said in the question like firm paid, you must immediately write to bank. Now the question is whether to debit partner or the realization account. How will you understand that? If nothing is given, you write realization debt. Here it is written, the partner is supposed to bear the expenses. So the situation is firm paid on behalf of partner. This is the entry. A's capital debtor to bank account. So the posting will be done in capital account and in bank account. So nothing is there in realization account for that. Okay. So that we have to do later, that you must remember. Then B took stock for rupees 55,000 and C took over building. So that is by B's capital and by C's capital. Write the amounts given in adjustments, that is 55 and 4 lakhs. Then next one, other assets realized, it is by bank. Debtors, furniture, machinery all together it is 1,45,000, or else you can write 3 times by bank. Just added and took the figure now. Then creditors were settled in full by paying them 65, but actually it is 70. Now what we pay is just 65. Should we pay the balance 5,000 later? No need, because this is the time of winding up dissolution. Then creditors agreed that we need to pay only 65. Understood? So that will be an income for the firm. So we need to settle only at 65, that creditors agreed. So no need to pay rest 5,000 later. So 2 bank creditors we wrote. Then what else is there? Okay, now adjustments are over. You have to check one more item, whether all external liabilities are paid. Here we have only one external liability, that is creditors. We paid it already. So nothing else is there. So now you can close this account, find the balancing figure. It is gain here. So find the balancing figure and close it. To gain transferred, ABC 2,500, 1,500,000. $5,000. Now you can close this. Next you start doing partners capital account. In this question we have to do capital account and current account. So before you prepare capital account, you will have to prepare current account, because current account balance will be transferred to capital account. Usually when you do partners current account, the balancing figure you will write as carry down and you will take it to the balance sheet. But now there is no balance sheet. You can't write it as 2 balance carry down in current account. We will write current account first. You can't write it as 2 balance carry down because there is no balance sheet to be prepared. So this will be transferred to partners capital account. And what about the balancing figure of partners capital? That is usually written as 2 bank. Understood? So current account balancing figure will go to partners capital. And the format of this current account is similar to capital account, particulars and 3 amount columns ABC. You have to write the opening balance. Opening balance for current account, sometimes it would be on debit side, sometimes on the credit side. So that you see the balance sheet. Liability side we have A and B's current, that will come to the opposite side. So by balance brought down, you write for A and B here 30 and 20. It is on liability, so it should come to the opposite side. Then C's current account, did you see on the asset side? So that should come on the debit side to balance brought down. Unlike your partner's capital account, this account will have opening balance sometimes on the credit side, sometimes on the debit side. You have to see the balance sheet for that. Take it to the opposite side. It is 10,000 for C. Only this item you need to write in partner's current account. Now you just find the balancing figure and that will be transferred to capital account. Then all other adjustments as usual you have to post in capital account itself. In current account only the opening balance you need to write. You find the balancing figure now. Balancing figure will transfer to partners capital. So for A and B, this is the balancing figure. We can't write 2 balance carry down because there is no balance sheet. So transfer it to capital account. So it is 30 and 20. Then here it is by partners capital. It is 10,000 here. Now you can close your current account and start preparing. You can start the capital account now. And all adjustments as usual will be recorded in partners capital account. Particulars, 3 amount columns we have. And capital account opening balance will be on credit side itself. It is by balance brought down. But there are situations in which we get a debit balance also. But normally capital account will be having a credit balance. 2 lakh, 1 lakh 50, 1 lakh 50. What is the next step? Read adjustments, or easier way is look into realization and partners current account that we prepared already. Okay, you have written there 2A's capital, then you have transferred the gain and all those figures will come to the opposite side now. So you write by realization 10,000, then by realization, that is the gain which we are transferring. It is 2,500, 1,500, 1,000. Then see the other side, the credit side. Credit side you have by B, by C. So take it to the opposite side. Just transfer to the opposite side. That is enough. For that you need not be intelligent. You just have to copy paste 55 and 4 lakhs. Yes. See your, this 55 and 4 lakhs, it should come in the other columns, B's and C's column. Just see their names and write. Yes, B and C's amount. Yes. Then current account you just see by C is there, so that we'll write 2 partners current, or you write 2 C's current. It is C's amount, no? Yes. So you write 2 C's current. To C's current account, the amount is 10,000. Then by A's current and by B's current, 30,000 and 20,000 in B's column. Okay, so that step is over. Instead of reading adjustments, we looked into realization and partners current. We transferred all the items. Then third step is transfer profit or loss on realization. Automatically that step also we have covered. Next step is look into the balance sheet. See whether you have any P&L account there. Yes, liability side we have a P&L account that you have to transfer by P&L, divide it in the given ratio. Nothing else is there on the liabilities. It is 25, 15 and 10. Then on your asset side, do we have anything like advertisement suspense? No, nothing is there, so nothing to be distributed. Okay, the current account balance already we have taken in current account. So this account is over now. Yes, realization gain we transferred. Did we transfer that 10,000, that expense? Yes. So all those figures we have transferred. Now this account is over. You can just balance it. Find the balancing figure. If the shortage is on debit side, there you write to bank. The balancing figure is 2,55,500. Just compute the balancing figure, and 1,31,500. Then for seeds on the other side, okay, by bank, you compute C's value 2,49,000. Did we write that remuneration amount? Oh, we didn't write that. See that transaction number 1, A had to bear the realization expense. We gave him remuneration and A is supposed to bear and the firm paid means, didn't we discuss the entry? A's capital debtor to cash or bank. So that entry must be posted here. We didn't write that because we didn't post that entry anywhere in previous accounts, but it should come here in partners capital. The entry we discussed already, A's capital debtor to cash or bank. You remember that 12,000 amount A is supposed to bear. So A's capital must be debited, A's capital debtor to cash or bank. Then only you will get the balancing figures actually. You must write this. It is not written anywhere in previous accounts actually, because it is not appearing in realization account. Understood? So it is A's capital debtor to cash or bank. It's not there in realization and current account, but it should come here. That you must remember. I didn't include it there. You just add it there to bank 12,000. You can identify the mistake actually, because when you do bank account will not tally. So you have to read the adjustments. In case if this happens, if you miss out this item, and normally your bank account will not tally. So you go through the adjustments once again. The first adjustment itself says A is bearing the expense. So that time you can just correct it in case it happens, but when you read the adjustment itself, you just put a tick mark there for you to remember. So you can directly add it in partners capital. Then bank account you prepare, you just have to look into the previous accounts and do. Same time you have to check whether there is partners loan and there is cash in hand account on the asset side. If you have these two, just close it. Understood?